Can I get invested with $100 a month? Well, yes, you can. I started with 50 a couple years ago, but investing with only $100 a month can only get you so far. It is simple, but it is not easy. There are some things you need to know on what it is possible and things you should stay away from, which cannot bring you to what you want to achieve at the end. So if you want to just invest $100 and you think that's all you have, which is honestly what I doubt, everybody has more than that. It's a budgeting issue at that point. But let's say with the best of your ability is $100 a month. Where can you get that invested? How can you get it invested? How much can you expect from it? Well, long story short, you can do a lot with $100, but I'm just going to break it down for you. So let's say $100 a month invested. All right, let's first start with cash. All right, there's a lot of people that just stack cash. They save it up for something, and and they lose motivation quite fast, because just saving cash, even just to get to 100,000, will take you 83 years. To get to 1 million, you guessed it, it's 10 times that, 833 years. Not many people live that long to get to $1 million, and plus inflation will just deteriorate your purchasing power. So that's really not an option for us. Stacking cash short term, it's fine, but if you want to make it big with that, is not an option. And then naturally the progression next is that people start to figure out, well, can I at least lend it to someone? What if I give it to somebody and they pay me interest on it? And then there's this saying that Einstein said, right? It's the compound interest is the eighth wonder of the world, right? So, but really interest does not pay that well. We'll call that a bond, right? If you give it to a government or municipality or something like that, let's say you can get about 4% on that. Even with that, that is 38 years to 100,000 and 91 years to $1 million. Well, what's really the point then of just investing the $100, right? That is not really an option for us, but what else can you do? That's where a lot of people actually already get stuck, because they're afraid of losing their money, right? So what naturally the next thing is basically giving it to a money manager, right? If you invest through your company into an RSP and they match it, in the US that's a 401k, and the company matches it. So I'm going to call it modern portfolio theory, right? This is usually what the money managers then get you invested in, and to be gracious, they can do about 7% for you, and that's already asking quite a lot. After the fees and everything, there's really only 7% leftovers. Let's say you give your money to them, they do it for you. It will take about 29 years with $100 every month, 29 years to get 100,000 and 61 years to get to $1 million. Well, you can't retire off of that, right? That takes way too long. So here's where most people get stuck, because from here to get to the next level, you really have to take control of your own money, right? And for us, this is not an option. So really at this point, you have to invest your own money. You have to do it yourself. You can't just have somebody else invest it for you. So a lot of people are already starting to do that, and they start index fund investing. So what they do, it's just like, when you buy something on Amazon, you download the app, you make an account, you purchase something, it ends up in your cart, you purchase it, and then it gets delivered to your door. Buying an index, like managing investments yourself, is a lot is very similar to that. You basically just download an app, open your accounts, the RSP, the TFSA for Canadians. For the Americans, it's the 401k, the Roth IRA, a bunch of other ones. And you fund your account, send some dollars there, and then you just buy whatever you want to buy. And then it's just held in your account there, in your shopping cart, per se, if we continue with the Amazon analogy. And the value of those then over time grows. And then the most popular index fund is the S&P 500. Now the S&P 500 over time has really done you about, like, say 10%, right? But even with 10%, that is still 24 years to get 100,000 and 47 years to get to $1 million, right? And this is already not a bad place to be in. This is where then actually most people stop. You know, making the jump from here to there is already great. They just become maximalist index fund, S&P 500, just everything they have in there, $100 a month consistently. It will get you where you want to go, especially if you put in more than $100 a month, right? So this is great, but can you do even better? Yes, you can. Let's say we become a little bit creative, and what you do is, instead of taking the $100 and investing that the whole time, let's say you own a house already and you have some equity in the house, you already have a current mortgage or you have it paid off already, but $100 can get you about a $20,000 mortgage, an additional mortgage on your house, let's say at 4%, right? That would equal to a $100 payment, right, per month. That's the mortgage, right, on the $20,000. And you dump that in there right away. So you're paying $100 on the mortgage, but the whole mortgage gets invested. So let's say that S&P 500, and then you fund your RSP plus TFSA, right? But that was all with a mortgage, right? 10%. There you go. Now, if you do that, this gets chopped down to 14 years to reach 100,000, right? And 39 years to get to $1 million. So this is quite achievable already. Now, this is really just a few percentage, low percentile of the population. Actually, in Canada, only about 77% of Canadians invest at all. They have like any stocks at all. About 49% buy annually. Right. So that tells us that 23% actually stack cash, really, right? And then the rest of them are really in here. According to some online surveys, there's really for 5 to 10% of people that are in here, right? Like about 10% here, and at least the rest are like the 67%, somewhere in this range, right? Just stuck with money managers and stuff like that. Yeah, but can you get even better than this? Yes, you can, right? There's something called the Amplifier portfolio. This is the one that I run, right? Like this is Amplifier portfolio. You can find it in the description down below. It does about 30% a year. You can set up how aggressive you want to be, and it really just amplifies the S&P 500. If the S&P 500 swings up, it swings up as well. If it swings down, it swings down. So let's say we compare this one to that one. If you do the Amplifier, you would get 20 years to $100,000 and 31 years to $1 million. So that's a little bit lower. But let's say you do the same thing with the mortgage, right? So we do the mortgage into the Amplifier portfolio. I'm just going to say AMP, into your RSP and TFSA. So now this will get cut down to 5 years and 14 years to $1 million. This is what $100 a month can get you. $100 a month, secure yourself a mortgage or something similar, and then just invest that money and then your $100 a month goes towards the mortgage, but the 20,000 instantly gets invested in your RSP, TFSA. If you're a renter, use the FHSA. That would be a good alternative for you. Or you do have the RSP available in TFSA, but the FHSA is just more powerful, right? So, 14 years, right? So in this whole time, during the 14 years, this would have been 168 months of payment, right? But the average interest that was actually paid was about $50 of average, right? Payments. And that comes down to in a total of $8,650 total interest paid, right? Really, to get to the $1 million in 14 years, it only costs you this much, right? And then once you're at your $1 million, just you can pay off the rest of your mortgage or just keep it going whichever way you like, right? I want to switch gears though. Let's say you realize that this is already working within like a couple years or a couple months, and you want to up your game a little bit, which I would really encourage you to do. You know, make a budget, go through all the line items, look actually what you spend everywhere, right? And then really increase that. Let's say you work hard at it, you learn to earn some extra cash, and you actually put $1,000 in per month now. It's totally doable, even on minimum wage. All right, so that would bring this top line number here. This would be now your $1 million. The next line would be your $10 million. That means $1,000 a month in the S&P for 24 years can get you $1 million, right? This is basically what most self-directed investors do, or a lot of them, let's say that. But in the Amplifier portfolio, you can cut it down by 20 years. If you do that with the mortgage, just the S&P 500, that's 14 years, right? But Amplifier portfolio, mortgage, 5 years. So let's see what your interest payment would have been on that in total. That would really be a $200,000 at 4%, right? And then it would be about $1,000 a month payments, right? Makes sense? And that would have been a total just for 60 months now, right there. And total interest would be $36,000 total interest paid. Now, $1,000 a month can secure you $200,000 mortgage, if you have the equity, of course, right? If not, then find something in between. But this could potentially already get you in 5 years to $1 million, and it really only cost you $36,000 in interest, right? Because you would have been paying this off for basically 5 years as well, so that amount is already lower, you know, and then cancel your line, you know, take your investment, sell some of your investments, pay off the rest of the mortgage, and you're good to go. See, there is a clear path towards wealth. All that you and I have to learn is how to make the leap from investing in cash to going here in bonds. And this is a psychological mind shift, right? And then actually learning to go more aggressive and be okay with the volatility in the market, right? Because there's really no volatility in cash, but you can't win that way. And in bonds, especially short term, there's little to no volatility. It's very, very safe, but you can't win that way. And with the money managers, there's some volatility, and really they play a game of giving you the least amount of volatility, and it's costing you returns, right? That's why they can only give you 7%, because at the end of the day, they don't get paid, but what they can do for you, they just want to hold your money, give you more than, you know, just to keep you happy, but they want to get paid by just holding your money, right? 1.5%, 1.75%, something like that. And then learning how to invest yourself, right? S&P 500, there you go. And then really, everybody invests into real estate with debt, right? And it's very unpopular to say that you should like also have an investment loan or something like that, or take out equity from investments. I'm really fine with it as long as it goes into the S&P 500 or into the Amplifier portfolio, which is mostly the S&P 500 anyways. I just add one more thing to it, which amplifies the returns, right? And we can get better results that way. That's why really make the shift this way. Come to the Amplifier portfolio, learn how to do that, also do it this way, right? And then you can have outsized return. You can go beyond that too, but that goes beyond investing now. And really that goes into the trading world, and there you actually have to learn the skill. This is only, it doesn't take much more time or at all than just investing into the S&P 500 the entire time. Right? People stack cash all the time and they put it away into an envelope or something like that. Doing this takes the same amount of time, right? It's a once a month thing. And even like if you have if you have a mortgage, then really you don't do it at all. All you do is you pay your mortgage while your account already compounds and compounds. You just have to learn to be okay with market fluctuations and know that it's not the end of the world. COVID wasn't the end of the world. 2008 wasn't the end of the world. 2022 wasn't the end of the world. Tariffs wasn't the end of the world. Really, if it is the end of the world, then it is the end of the world. But so far it didn't happen so far, right? So there we go. There's the roadmap. Yeah, I didn't go into all the details of what each one is. We'll do that in a future video, but this should give you a really nice rundown on what is even possible. Thank you for watching. We'll see you in the next video. Link in the description below for the Amplifier portfolio. See you there.